8:32. We can start now. Let me share my screen. If you can see my screen, just give me a 1. So good evening, everyone. Today is 29th of June, 2024, 8:30 p.m. I'm presenting from Penang. Thank you, Kenneth, for giving me a 1. So let's go through the month of July's forecast, which the main theme of the month is month of conflict. Okay, so we shall see that whether the conflict is escalating or what does it mean by the month of conflict through today's forecast on the July's energy using astrology. And later on, PC will present his part on his global trend research to check whether astrology energy and the global trend research has a alignment or not. Okay, so yeah, let's go through the talk agenda for today. As usual, I will do the introduction, which I already did, and a disclaimer, a brief recap of last month's forecast, and the influence of the 5 elements using the Bazi chart for the month in July 2024 and July 2024 geopolitical and financial forecast done by PC through his global trend research. And we will close it off with summary and Q&A from the floor. Okay. So before I begin, I would like to welcome everyone to today's session. Thank you for calling in. I think there are 12 of us, and we have those regulars that call in: Augustine, Tia. I have not seen Chia before. So Edmund, Esme, our regular, Gavin, Gilbert, Jesse, Juki, Kenneth, Maitra, Sharon, and Wink. Okay, thank you for spending your Saturday evening with us. So let's go through the disclaimer for today's talk. This content that we are going to present today will be based on our study in global trends using the Chinese astrology and also global trends research for you to use as a guideline. We would like to caution everyone to exercise caution in your investment in such volatile situation and do your own research on the company. We will not give any stock advice. And although PC does give some in the Telegram channel that is shared with our members of astrology and global trends, but normally this is just a sharing. Okay. So I think most of y'all has known that what we are doing. We both deploy two methods with Chinese astrology and global trend research to focus on global trends. Then we will ensure that we will check the planetary energy field and the trend research to achieve accuracy of 80% and to help our members, anyone call in, to at least look into what the trends will be and predict what the potential profitable investment in the future to help y'all in your investment decision. Let's recap on last month's energy and what happened during last month. Is it as predicted? So last month, the year pillar, we know that is a jia chen, right? And last month there was a geng. That means metal which chop the wood. That means the wood is severely impacted. Okay, last month, and wood actually here it also means the officer star for the year and means that there's a lot of chaotic in the government, a lot of internal rebellions that is going on around the world. I think you can know that. And then June also there's a lot of election that's going on around the world as well. Okay, so but the fire will create more of earth energy. So everyone means that everyone will gang up more. The fire is escalating. Everyone will gang up more to um go against the government in some countries. And we know that the West now is in attacking mode because Keng also represent the West, which is Northwest. US or the Western countries, and then wood is representing the Eastern country. So the East and West, they are also in attacking mode, and the authority very much weakened, especially the country leadership, and we have a lot of instability, especially in the Middle East now. The military conflict with the alignments of the planets, which I talk about, the Mars, Neptune, Uranus, and also Saturn, on the 3rd or the 4th of June, right? On that day, that is an alignment. So this is a planetary energy that shows that because this Mars and Saturn is already a very volatile energy. Normally, they are related to military, even Uranus as well. Okay. And if we look at the global trends for 2024, um, yeah, okay. I would like to go through this 2024 forecast first because I think in our book, the one on my left side on the Astrology Global Trends 2024 forecast on the Jiachen or the Dragon Year, I talk about summer floods. And indeed, summer, we are already in the month of summer here, and we can see that there is very unusual types of floods going on. For example, in Switzerland, Zermatt, I think PC has talked about that during our course as well. And severe weather also comes after floods that swept Germany in the west. So we also talk about the instability in the west. So all of this happen mostly in the west, in US, in Mississippi, in northwest. So all these are floods. So I and it's related to natural disasters as well. I do not know whether this is also related to the recent eclipse that we see in the April. Then after that, the effects that slowly kicks in of this all these natural resources as well. And there's also floods hitting Bangladesh, the Indian subcontinent as well. Okay. Yeah. And from the geopolitical standpoint, we talk about instability in Western politics, okay, especially in Europe itself, and then the general elections also in Britain, and also the general election in France. These are the two main countries in EU. So we do not know that what will happen to EU, after this year. And also military conflicts in the Middle East has been escalating itself. Okay, there will be potential, backup of Lebanon's, and the dangers in Lebanon's. Okay, that is expanding. And okay, this is some of the news that is quite interesting. We have flesh-eating bacteria outbreak here recently. Okay, on the 21st. Actually, sin and metal also represents skin. Uh, okay, so this is also related to skin. And then we also have, I talk about technology breakthrough. So we do have technology breakthrough also in the month of June related to solar cell durability, because the month of June is perseverance and durability. So this is something that is discovered by Canon. We know that Canon as a camera maker, but actually they have more than that. Canon also has in the industrial portion where they do film materials preservations, because they study a lot of materials. I think in the olden days, because they have like films, the camera films that is related to materials. And from there, they study technology that is applied in other areas as well, from the solar cells and everything. That's why you can see that even though you cannot see the brand name of Canon now in the market, but however, those Japanese company, most of them, they have turned to like upper tier suppliers that look into, materials, preservation technologies, material technology.
Yeah, I also want to add that Nikon and Canon, we know them for their lens as well as camera. But Canon is also one of the major exporter of semiconductor equipment, the
Mm,
same as Nikon. And Fujifilm, which last time it was the one of the top film manufacturers, their current major business is actually is in X-ray as well as medical equipment, imaging. Yeah. So that's quite a depart from the ordinary imaging and photography business for all these three companies.
Yeah, they have pivoted ever since the arrival of digital cameras. So they have already, transformed their business model to another part where they still use whatever technology, because all this preservation filming and all this, they use the same technology, but except that the application is different. Okay. Yeah, this is just my knowledge from the manufacturing world. And then yeah, we talk about period nine, women presidents from Iceland and also Mexico is making headlines now. And okay, these are all the headlines that we have. Okay, so let's go through the month of July 2024 energy. Okay, month of July 2024, I would say that the energy is milder because it's not young against young. Last month it was like young metal against the young wood, right? Now it's sim metal against the chia. So the energy will not be, so strong. Okay. But the metal and earth energy is strong this month. So the wood is still weakened. Okay. So therefore the wood is still very much weakened because it has been weakened since last month already. From the chia month itself, that is having this problem already. So now sin comes in also has a potential impact on Chia. Means that global tension will continue to escalate now, because this is the Duke of Jupiter or the leader of the year or so. Okay. So that means that the global tension will continue to escalate, maybe potentially because Earth is strong, there will be competition in the market. And then we also look at potential property markets are impacted. I do not know whether the study from PC also shows that potential impacts of the property market will be escalated. So we shall check on that later on his portion. Just clear this away. Okay. Okay. So another thing that is interesting, this is just for the fun only. Maybe this is a message from universe. Okay. What I discover from the internet, all fish is actually they are I Oddfish is a type of sea serpent. That means sea snake. It's very long and they are very rare. They are always in the deep waters one. They don't appear on the beach. So whenever there are years when they appear on the beach, there are few times they appear. I think very rare in the history. There's a lot of disasters that follow. So this time we have all fish that's been washed up to the shore in Vietnam. So it is a fish that predicts natural disasters, especially, disaster may be related to earthquake. Okay. So I think only recent, I think the month of June that these things happen. So this could this be a sign that something will be escalating, maybe, later, not in the month, 2 3 months down the line, especially just like Augustine says in October, the shit month that is clashing with the dragon. So we shall, look at the energy during that time. Let's go through the next one. Yeah, let's go through the month July 24 hexagram based on the thin ways pillar here. The way I derive the hexagram is actually using the 60 jiazi. Each 60 jiazi itself, they have a hexagram that is representing the um the jiazi. Okay, so here we have the 60 jiazi. The hexagram itself is conflict or litigation, which is hexagram number 6. Wherever we see this hexagram, it means geopolitical tension in the context of global trends. It means geopolitical tensions between major powers, that disputes over territories, trade conflicts, and also legal, ethical dispute globally about human rights, trade wars, and then corporate disputes the climate change, environmental justice, social justice movement intensified. Technology and also cyber conflicts could also happen. Okay, so it's all about related to conflict. And one interesting thing is that as I predict this, I also see this news, which happened about 5 days ago on the Indonesian data center has a cyber attack. Okay, the country. So it's quite major. And they says that the next target will be Australia. Okay, so once you have a national security data center being threatened, all the things that's related to the public, like public transport, maybe the airports, or potentially, could be crippled by such cyber attack. Okay. And okay, so we will not go through the year evaluation hexagram of abundance because we also says that the market come to its peak already. Is actually the fourth line is second week of June, maybe till July is about 6 7 weeks like this. So we are still in that, in the fourth line. Okay. So over to you, PC. You would like to share your deck?
Yeah, yeah,
Okay, I think you can do so because I have already made you a co-host.
yeah. So we predicted quite a number of things here for month of June. So some we were partially right, some did not happen. But let's go through them. Um, in Europe, we predicted that the EU and UK inflation will notably be higher, but we were only half right. UK inflation actually slowed to 2% year on year in May, down from 2.3% in April. And we expect a rift to surface between the US and Europe due to the ICC ruling against Israel. But so far, the outcome has been very tepid. There's no although there were threats issue, but it didn't put into jeopardy the relationship between US and Europe. So China, we expected the Hong Kong Stock Exchange and Chinese Stock Exchange to rally after the announcement of more stimulus from the government. But then the rally fizzled later in June. Okay, so the Hang Seng actually started to fall, I think almost about 1,000 plus points since reaching almost 19,000. Right now it's back below 18,000. And we expected China to continue to dump US treasuries in favor of gold, but it bought an additional 3.3 billion of US treasury. And also the PBOC signaled a pause in its gold buying. But we were so half right because although the PBOC stock is, put a pause to its gold buying, the inflow of funds into Chinese gold ETFs rose by 1.8 billion renminbi in May, extending their inflow streak to 6 months and pushing their total assets under management to a record high. So while the government on the PBOC side have stopped, the people continue to load into the gold ETF. So here we are half correct. Okay, Chinese still continue to hedge, okay, in gold ETFs. So silver price failed to take off as expected due to continued suppression by the bullion banks. In fact, the bullion banks have been very aggressively trying to keep silver below 30 because a lot of the contract for the month of delivery in July, which will start next week, were for $30 and above. So that's why they keep on attacking silver to put the price below 30 so that a lot of the options expired out of the money. And also it put pressure on those people who are long, looking at the price that they have, that they bought the contract maybe above 30, but then they see that the price has down, let's say 10 or 15%, then they decided to call their quits because a lot of the futures position, it is not for physical delivery. Some are buying just for exposure and for speculation. So when they see that the price has fallen, coupled with um, the CME has imposed higher margins, okay, for higher margins, then they decided to call their quits, okay, rather than needing to put in more money, okay, to make up for the margin call. So that's why they would rather relinquish their long position. But nevertheless, based on the futures of the gold contracts and silver contracts, the bullion banks actually have expanded their net short position for gold and silver. And their losses actually were much higher last week. Their paper losses anyway were much higher last week than 2 weeks ago. So the more they sell, okay, the more exposed they are in their net short position. And I believe that there were reports that the foreign institutions were actively buying, probably because buying gold especially, probably because of the recent announcement that the unit which will back the trade settlement for Enbridge will be 40% backed by gold. And in the US, we anticipated that US consumption will continue to weaken due to the stagflationary so in the US, we anticipated that US consumption will continue to weaken due to the stagflationary forces at play. So net retail sales less CPI actually fell 1% year on year in May. The crucial control group, which is used in the GDP calculation, also disappointed in May, rising only 0.4% month on month, while April was revised lower to 0.5%. Now, this is the fourth monthly miss in 5 months, and therefore, likelihood the US Q2 GDP will not be very good either. So we also show that the increase in M2 money supply will continue to provide support for the stock market, and the S&P index is now trading at a new record high of 5,283 points. The CRE crisis in the US has indeed worsened. On 4th June 2024, Business Insider reported the FDIC revelation that 63 US banks were sitting on 517 billion on unrealized losses. And based on the report that I got early this morning, the losses has now been increased to 525 billion. So this will keep on escalating as more buildings are being sold at huge discount. So as predicted, the Fed left interest rates unchanged in June. And where the property market is concerned in June, where we got right, was that default rate on credit card debt among small and medium-sized banks have exceeded the rate during the dot-com bubble and the global financial crisis. And the delinquency rate of multifamily housing has also reached its highest level in 2011. And here the US households are under duress. So dissenting political views in the US is being censored and being portrayed as being unpatriotic. You can see that there's a lot of censorship right now in the US, and people who voice their support for one group are cancelled in some ways or another. And political tension is heating up as Trump leads Biden in the polls. So due to the US own hypocrisy, the goodwill and trust of the US in Global South is being eroded. You can see that whatever the US says nowadays, the Global South just ignore, okay, as an empty vessel making the most noise. So in Europe, as predicted, the EU inflation rose 2.7% in May, up from 2.6% in April. As expected, the ECB cuts its interest rate to 3.75% from a high of 4% in June. Right-leaning and anti-immigration parties storm ahead in many local elections. Hungary's anti-immigration stance has seen it being severely punished by the EU, including a one-time 216 million euro fine and 1 million fine on a daily basis. So can you imagine, if for one whole year the Hungary decided against allowing immigrants to cross their border, then that will be 365 million a year. And that could continue to snowball. And this is how here the EU says that they are the beacon of light for democracy and freedom of choices. But when Hungary decided not to allow immigrants to cross its borders, then it's being severely punished. And that is why the Europe continent, as well as the US and Canada, are being increasingly seen by other parties as being highly hypocritical. So 10 of the EU's 27 member states now recognize Palestine state, okay? And Hungary and Slovakia remain opposed to sending arms to Ukraine. So China, where we got right, China economy indicators show that it is still experiencing a steady growth despite the narrative from most mainstream media. So NEV's share of the market continues to grow. The penetration rate is expected to hit a new high of 49.1% in June. And there's a lot of anticipation that by end of 2024, it will be closer to 80%, because it's like, just in the month of May, the market penetration was around 39%. So in 1 month, it gained another 10% market penetration. So with another 6 months to go, okay, there is a lot of anticipation that it will hit 80% or even closer to 90%, according to some analysts. So we mentioned that China discussion with several Gulf states will yield results. And sure enough, Saudi Arabia has decided to join the bridge. In terms of geopolitics, we predicted that the Middle East crisis will deepen, and news are coming out that Israel may invade Lebanon. Meanwhile, embassies are evacuating their staff from Beirut, and US Navy is also moving closer to Israel and Lebanon. So whenever embassies start evacuating their staff, then that is a high indication that war is inevitable. So internal strife in many cities in the US and Europe as both pro and anti-Israel parties clash. Now, back to the current situation, the economic indicators of the US. CPI was unchanged month-on-month in May. Year-on-year, it grew 3.3%, down from 3.4% in April. Core CPI was 0.2% month-on-month in May. Year-on-year, it grew 3.4%, down from 3.6% in April. The PPI was down 0.2% month-on-month in May. Year-on-year, it gained 2.2%, down from 2.3% revised in April. So overall, inflation pressure seems to be lifted slightly, but I came across a news podcast from Peter Schiff, a well-known economics analyst. He said that the US government may consider putting a guarantee on second mortgage for people who wants to buy a second home. Now, if let's say the US decided to be a guarantor for a second home mortgage, then I think, inflation would definitely go up much higher, because this is another form of money printing. Okay, because people who are not eligible for mortgages are the reason why the banks rejected them. And if the US government decided to put a backing on people who are not eligible, then we will have another housing crisis like 2008, because again, those what they call as ninja loans. Okay, ninja loans, that means no income, no jobs, no jobs. Okay, so that is no jobs at all. Okay, so that's why if the US government decided to go ahead with this plan, then I fear that the US will be heading towards a similar crisis like the housing crisis of 2007 to 2008. So let's see, okay? Retail sales rose just 0.1% in May. Year on year, it gained 2.3%. Now, if we take into consideration that the CPI was 3.3%, net retail sales less the CPI was actually down 1%. So industrial production rose 9% in May. Year on year, it gained 0.4%. So industrial production has been a lot of up and downs, okay, but then year on year, it only gained 0.4%. The National Association of Home Builders Index came in at 43 in June, down from 45 in May. And if we look at it, more and more construction workers are actually claiming the unemployment claims because of falling building falling projects, okay, of falling housing projects, construction projects. So a lot of the construction workers are actually without any jobs. And if we look at it, the housing data is really very poor. Housing starts fell 5.5% month on month in May, while housing permits fell 3.8%. Existing home sales fell 0.7% month on month in May. Year on year, it fell 2.8%. New home sales fell 11.3% in May. Year on year, it fell 16.5%. Pending home sales fell 2.1% month on month in May. Year on year, it fell 6.6%. Now, this 6.6% fall is the lowest since they started tracking the pending home sales. Okay, it is even much lower than during the pandemic and the global financial crisis. So this is how the situation is with regard to property in the US. And just now, Evelyn was saying, how things are with the property market. So we are seeing some early indications, okay, because a lot of this happened during May, and it will continue to go into June, which I will share some charts afterwards. So preliminary PMI for manufacturing came in at 51.7 in June, while PMI for services came in at 55.1. So you can see that the US economic indicators for surveys in the PMI, it shows strength. Economy is still in expansion, but in a lot of other indicators, for example, housing and retail, it doesn't really show that kind of growth that the PMI is indicating. So US leading economic indicators fell 0.5% month on month in May. In fact, it's still in negative territory year on year. Still, year on year is still far below 5%. Okay, around 5.5, -5 to -6% probably. Now, why the US could face a housing crisis? Now, the high household debt and rising delinquency or default rate, which we covered earlier, and affordability level has crashed. Because of the hike in interest rate, the affordability level has continued to fall. People cannot afford to buy homes, just as the price of homes remain on an average still climbing in many parts of the US, and the burden of paying for the housing loan has increased dramatically because of the high interest rate environment. Then if we look at the house price, which is in blue, has outpaced earnings growth, which is in red. So that is another reason why people cannot afford to buy homes anymore. Okay, because you can see that the gap is actually quite huge. And home ownership has peaked and is now on a downward trajectory. So if we look at it, it came as a peak here because, low interest rates, a lot of people are flush with money. They started to buy, okay? And then after the first buying, now it has peaked over here. Okay, if we ignore this sudden spike due to the stimulus or money printing amounting to a few $1 trillion, if we take this as a peak, it is now trending down. Now, interest payment has now surpassed 500 billion, okay, for the household. And homes for sale has just reached its highest level in 14 years. So people are rushing to sell their homes. Now, why is it? Because interest payment for the people have increased. That means that they are selling their home in order to offset the debt that they owe, okay, because the interest payment have just increased rather dramatically. Because here we are talking not only interest payment on credit card debt, but also interest payment on the auto loans or student loans and mortgage. So that is why people are finding it unbearable to continue living with such a high debt, and they are forced to sell their home, okay, in order to pay off their mortgage, which will be the biggest bulk of their debt. And that is why we are seeing that houses for sale is trending up. Now, if let's say economic conditions continue to worsen, as I mentioned, construction workers have many people who are out of job, then more and more people will be unable to keep on sustaining their mortgages, and what they do then will be selling their homes. So as more people flood to sell their homes, they will be in competition with each other. And each month becomes more desperate because interest rates keep on piling up. Therefore, we will see people started to cut their price in the market. And in certain states, houses are already being sold around 10 to 20% discount as home buyers, rush to the exit. So let's look at the US federal deficit. Now, the federal budget deficit has reached 1.2 trillion in the first 8 months of fiscal year 2024. The deficit was 38 billion more than the deficit recorded during the same period in fiscal year 2023. So here you can right now see, even though the Fed is tightening, the government has been spending more than the previous year. And this could be the reason why M2 money supply continue to go up. And revenues, although increased 10% higher to 294 billion, but outlays actually increased 8% to 332 billion higher. And during the period from October to May 2023. So in this regard, the US government will continue to put more money into the economy, even though the Fed is doing QT and keeping interest rates high, okay, because there is still money flowing into the economy. And that is why it's very difficult to see the absence of monetary supply to push everyone into a thrifty manner, okay, or forcing people to sell their stocks or whatsoever okay, in order to sustain their livelihood. Okay, just as now, the market is high, even more people are piling in. And right now, previously there were a lot of what we call leverage ETFs, okay, for specific sector. For example, you have 2 times, 3 times leverage ETF for the oil sector or for the uh, industrial sector. But right now, there are 2 to 3 times leverage ETF for particular stock. Like there is a 2 times leverage ETF for NVIDIA. Okay, so the propensity to gamble and the propensity to speculate has reached very, very high levels. And that is the danger point. And a lot of people that I follow in Twitter are sharing that even their family members who have never bought any stocks, they are telling them that they are going to buy Nvidia. Okay, and that is the peak so-called speculative bubble. But I wouldn't recommend anyone to short Nvidia because there's a lot of buys to support it. So, if you want to trade, you have to be good at the technical side. Okay, if you want to buy and hold for long term, then I think it's quite difficult to actually for Nvidia to achieve another 10 times kind of gain, because some analysts, the most bullish analysts I came about, they say that over the next 2 years, Nvidia uh, uh, market cap will triple to 6 trillion, would double to 6 trillion. Right now it's at 3 trillion. So why do you want to buy a stock that is so highly speculative currently, and you expect 100% gain over the next few years where the risks are actually much higher? Rather, I think if you want to buy, you might as well buy stocks that are undervalued with higher chance to have multiple gains over the same period of time, okay, rather than just 100%. So because when people are again so speculative on just one particular stock, it goes to tell you that the market is frothing, okay, and it could actually cause some misjudgment, okay, where investing in this kind of environment for a single stock is concerned.
It
So
could also be
meanwhile,
a
yeah,
trap. Yeah, it could be a trap
yes,
also. So be careful.
yes. So if you are already in Nvidia like a few years ago, okay, then it's quite all right. You want to hold, okay. But if you want to add your position, then I would say, you must well hold it and take profit appropriately,
Mm.
when it move up every now and then. Okay, so that's why I wouldn't buy those stocks that are uh, let's say, have reached this kind of valuation. For example, the entire semiconductor market is projected to be valued at 1 trillion, more than 1 trillion in 2033, which means 9 years from now, based on 1 or 2 years ago projection. Nvidia is already 3 trillion, which means it's already 3 times the global market size that's projected to be reached in 2033. So that's the danger. Okay, it's already flashing red. So don't pursue it. Okay, there's still a lot of cheap AI stocks or AI related stocks that are in the market. Okay, so you just need to be a bit more selective. So US debt meanwhile have reached 34.8 trillion, and the total interest payment per year now amounts to about 1.059 trillion a year as of the end of Q1 2024. So you can see that ever since the Fed started to raise interest rate somewhere along here, it has shot up parabolically. And that is why, despite what the Fed say, we could still raise interest rate, we could do this, we could do that. I don't think the Fed will dare to raise interest rates because US debt is escalating right now. Every 100 days, the US could potentially add one more trillion to its debt. And if let's say at current interest rate, that means that every 1 trillion, the US will be paying interest of around 40 to 50 billion additionally a year. So that is why I think despite what the Fed jawboning about hiking interest rate, I doubt that they will be able to do so. And the Fed will eventually be just like Japan, okay, like the BOJ always like to say, don't force us to make a decision, okay? We are seriously considering. Uh, we will don't underestimate the ability of the BOJ to take action. So there's been a lot of all talk and no action, okay? So Japan is another NATO country, okay? No action, talk only. So that is why the yen is collapsing because they have reached a level where they cannot even raise interest rate a tiny bit because the Japanese government debt is about around 200 to 250%. Although, if you look at some analysis from other institutions, they put it closer to about 200%. Okay, but then sometimes a lot of all this analysis, they want to lower down the risk level. They actually exclude a lot of things. Okay, so but Japan's total Japanese debt, including corporations and all those, is closer to 400% of GDP. And that's why they cannot raise interest rate. Otherwise, a lot of corporations will be affected and the government will become bankrupt. So what will happen to the US in July? Consumption will continue to be weak as US consumers are completely tapped out. The buy now, pay later campaign, which fuel consumption, will add to the consumer's debt burden. So when the retail sales started falling, okay, just like the US government would say, we will guarantee the second home loan. A lot of corporations were saying, oh, it's okay for grocery, you buy now, pay later. Okay, then, you still continue to buy. But actually, those corporations haven't received any real money, okay? They are just selling it in advance, and then they report it in their report. Oh, we have this revenue. But that revenue is not fully realized because it's buy now, pay later. And, to those people who are desperate, okay, we buy now, no intention to pay at all. So that is why, uh, this is the peak kind of debt when at the grocery level, people have to resort to buy now, pay later because there's nothing, there's nothing that they have, okay, in all that can be transacted, okay, to fuel their livelihood. So on 27 June, two major retailers saw their stock prices fall. And this is already telling you something about the consumption. Shares of Nike plunged 12% in extended trading after the sneaker giant slashed its full-year guidance, anticipating a 10% drop in sales. In fact, yesterday, I think the Nikkei actually lost about 20%. Walgreens plunged 24% after disappointing Q3 earnings release. Now, to a certain extent, a lot of the drop in sales was because of poor consumption as well as a lot of theft, okay, especially in California, where if you steal anything up to $950, you cannot go to jail. It will be treated like a misdemeanor, and that is why people keep on stealing things, forcing a lot of retailers to close shop. And the CRE crisis will not be ebbing anytime soon. Meanwhile, a new housing crisis is evolving, as I explained earlier. Now, despite the negative news, the impact on the stock market will be less negative because M2 continues to climb in May, which is supportive of the market. The US federal deficit is really telling you government is, spending, and it keep on spending money in order to boost the potential, okay, for the Democrats to retain the government in the next election. So inflation will remain above 3% owing to external factors, especially if war broke out between Israel and Lebanon. Fractions from other countries will join the war. Oil will likely rise, and with it, other commodities as well. Gold and silver will see a return in investors' interest. So here's something which could lend support toward a rate cut. Okay, continuing claims, which is in orange, have risen above prior years. So you can see that that was about 2 years ago. Okay, so the bottom was in June 2022, but since then it has continued to go up, continuing claims. That means that people still cannot find a job, so they keep on continuing their claims. And initial claims in blue have been trending up, okay? And this chart was actually presented by Liz and Saunders, okay, which actually show in detail the differences. So this is the weekly claims, initial claims. So it has trended up as well. So when both are moving up, it is a sign that the job market is not very good. And if, let's say, the job market continue to worsen, the Fed will really have no choice, because there is only two things that will force the Fed to cut, and that is unemployment and also the economy. So right now, economy seems to be holding itself quite well at about 1.4% in the first quarter. Okay, to the US, 1.4% is quite well, okay? China, 5.3% is bad, based on MSM, okay, the mainstream media. So if it goes Q2 GDP soften again, then I think the Federal Reserve might hint of they wouldn't cut yet, but they will drop some dovish sentences to allow the some optimism in the market. Okay, so that will be the initial stage. And if, let's say, it turns into negative and the job market continue to worsen, right now the unemployment is 4%. If, let's say, next week the unemployment rate goes above 4%, then I think the Fed will start to worry, okay? Now, the presidential debate has shown that Biden is incapable to lead. The Democrats will probably need to find a replacement. If there is no replacement forthcoming, then the possibility that the US will go to war will dramatically increase. Now, this is based on a lot of political analysts, which often warn that if all things fail, the US will always take the country to war so that the government can retain its power. And internal strife within the US will likely escalate, cannot rule out an event that could defer the election. So Euro area CPI came in at 2.7%, as I mentioned earlier, up from 2.6%. UK CPI at 2%, down from 2.3%. Now, Euro area retail sales came in at 0.00, I think 1 or 2%. So it's insignificant, and it's down from 0.7% in March. UK retail sales came in at 1.3% year on year in May, up from negative 2.3% in April. Surprisingly, UK is the one that seems to be holding up. However, if we consider net retail sales less inflation, both the Euro area and UK are negative at 2.7% year on year for the Euro, and down 0.7% year-on-year for the UK. German manufacturing PMI came in at 43.4 in June versus 45.4 in May, and services PMI came in at 53.5 versus 54.2 a month ago. So Germany is seeing some weakening in its economy. France manufacturing PMI came in at 45.3 from 46.4 in May, sorry. While services PMI came in at 48.8 versus 49.3 a month ago. So France is also seeing its economy weakening. UK manufacturing PMI came in at 51.4 versus 51.2 in May, while services PMI came in at 51.2 versus 52.9 a month ago. So UK seems to be doing a bit better than Germany and France. And as predicted by many, the EU slapped tariffs on Chinese EVs. So China threatened retaliation and managed to bring the EU to the negotiation table. However, reduction in the tariff offered by the EU was marginal, to say the least, because it's really very, very little, close to insignificant. So negotiation is ongoing, but China will likely retaliate with some restrictions on export to the EU or slap tariffs on selected EU's products. So that is a trade war brewing. Again, like Evelyn mentioned earlier, signs are pointing towards more dissension in the globalization of trade, where we have a lot of fractions right now fighting with tariffs. So despite the tariffs, Chinese EVs look set to dominate the EU market in coming years due to their cutting-edge technology and cost efficiency. Chinese EV makers could also set up new plants in the EU after BYD. So BYD actually set up plants in, if I recall correctly, in Hungary. So what could happen there? Hungary would be a major export point to the rest of Europe. And I see that many Chinese EV car manufacturers eventually would build plants in Europe. I think one of the key things is that they are able to sell to the Europeans, and because by over the next few years, I think China can actually bring the cost even lower because of certain technologies. And another thing that is driving the EV evolution in China is the coming so-called servicing that is called battery as a service. Now, battery as a service is a new kind of policy where the car actually comes in with a battery that is guaranteed for lifetime. Okay, and this battery is not immediately included in the price. So what the buyer does would be, I will sign for a subscription that will allow me to change the battery anytime I need to, and it just about a few minutes, okay, to swap the battery. And my car battery then is guaranteed, okay, because sometimes after some years, when the battery need to be replaced, it can be very costly. But right now, the price of battery have also decreased, and the battery swap technology have made it available for a lot of electric vehicles to have the battery swap instead of having to wait 10 or 15 minutes to be charged. Okay, so you just drive in, the battery is swapped, and it's just a few minutes time, and the driver can drive off. So if let's say that battery swap technology is being implemented in Europe, then Chinese EV car makers can make their product cheaper. Okay, but of course, you know what they do earn back is the life cycle value of the customer, because that customer will continue to use the battery subscription service whenever they can, whenever they can. And the battery subscription service is not very, it's not like initial capital payment for the battery itself, but over the years, okay, it might be worth more, okay, than having a car with the battery. But because people want convenience, and that initial capital cost is brought down, that will actually make people attracted to buy the vehicle. Because when you buy the vehicle, you don't actually pay cash, but there's also an auto loan. So eventually, it makes sense that, they no need to pay additional interest for the battery. And that interest can then be used as to subscribe for the battery swapping service. And recently, Volkswagen decided to invest 5 billion in Rivian to spur the latter's EV development. But I doubt that it will be successful, as Rivian is nowhere near a peer competitor in terms of technology when compared with Chinese EV makers and even Tesla. So we should keep an eye on Mercedes-Benz or BMW, which will likely partner with Chinese companies for the ex-China market. Right now, they are partnering with Chinese companies for the Chinese market, but I think they might want to look at more high-end technology, which they can actually incorporate with Chinese companies and then market ex-China. So what could happen to Europe in July? The ECB's interest rate cut will weaken the euro. Subsequently, we could see EU's inflation rising higher. The EU and UK economies will remain under pressure due to weakening economic indicators. Meanwhile, France's debt is spiraling out of control. France could be the source of the next euro crisis. And this is a news headline that investors in French bonds are getting nervous. Is the new euro crisis looming? Now, some of you might have read my Telegram message when I talk about a bank in Japan. I think it's called Norichukin. That has to force sell its foreign bonds because it is sitting at a 2.2 trillion yen loss. And it is a major holder of foreign debt and one of the largest holder of France foreign debt. So if Norijukin is in trouble, then that means that a very willing customer or buyer of France's debt, is no more available. And also we need to consider that France have been kicked out of West Africa by revolutionary forces, putting a lot of pressure on France, in securing needed minerals for its economy. So the other thing is that NATO is still subscribing to the belief that Ukraine will defeat Russia, and therefore more funds from the EU will be directed towards supporting the war effort in Ukraine. So what they do, the money goes to Ukraine and not to the local economy, and that is why we see social welfare in the EU and UK would suffer as a result due to the lack of funding for local amenities. So the UK funded a lot of money to give, they have a lot of money that have given to Ukraine, but then there are many townships, okay, that are in bankruptcy in the UK. And a lot of social amenities such as rubbish cleaning, trash removal, healthcare, those are being cut in order to support the war effort. So with many right-leaning parties winning the local elections, we could also see a toughened stand against immigration, and that could lead to internal friction between the locals and immigrants. So if we look at the economic indicators of China, CPI came in at 0.3% year-on-year in May, unchanged from April. Month-on-month, it fell 0.1% versus a gain of 1% a month ago. So inflation in China is still very low. Core CPI came in at 0.6% year-on-year in May, down from 0.7% in April. PPI came in at negative 1.4% year-on-year in April, up from negative 2.5% in April. So the cost of production in China, is experiencing negative inflation. I wouldn't call it a very strong deflation because consumption is still picking up. And most of the time, I believe it's because China has improved their upstream and downstream economic activities. And because of the using of robotics, using of uh, intelligent equipment have actually brought down the overall cost. For example, a number of mines in China, last time it's very labor intensive. They actually have a lot of people in the mines. So when there's accident, there's a lot of compensation to be paid. So right now, a lot of the dangerous jobs are being done by intelligent equipment connecting via 5G. And because of that, there are people who are in the mine that act as inspectors rather than driving the equipment in the tunnels, deep tunnels below ground, because the equipment driver is actually in an office, with multi-screens, connected to 5G that is actually moving the equipment out of a danger zone. So that is why when you can reduce the number of personnel, with investment in intelligent equipment, the overall production can be cheaper. So in that sense, that is why China is seeing low inflation. Now, the other thing is that retail sales climbed 3.7% year-on-year in May, and from the period from January to May, it climbed 4.1% year-on-year. So industrial production went up 5.6% year-on-year in May. Fixed asset investment went up 4% year-on-year in May, down slightly from 4.2% in April. Now, for the period from January to May, fixed asset investment rose 4%. Investment topped 18.8 trillion during the period. Investment in infrastructure construction rose 5.7% year-on-year, and manufacturing investment increased 9.6% during the period. So you can see that a lot of money is being put into manufacturing. And a couple of reasons. One is that with intelligent equipment, there is a lot of demand, because it can help a lot of companies save costs. Now, the other thing is that there is a huge investment being made, in semiconductor equipment manufacturing. For those who sign up for our period 9 course, I actually shared some of the companies which have seen massive revenue growth because of them being cut off from the US equipment manufacturers. Then the local manufacturers actually take up the slack. And then right now they are generating tremendous amount of profit. And the money, instead of being used for importing the equipment, is now being spent on domestic equipment. So that in a sense have also helped the local economy. But in the property sector, things are, of course, not very rosy. Major Chinese cities saw falling home prices in May. 70 large and medium-sized cities recorded month-on-month declines in both new and second-hand homes. So first-tier city, namely Beijing, Shanghai, Guangzhou, and Shenzhen, new home prices edged down 0.7%. Meanwhile, second and third-tier cities registered decline of 0.7% and 0.8% respectively. So if you look at it every month on month, it's like 0. something percent. Over a year is likely to be closer to 10%. And because that housing crisis had been ongoing since 2021, so if we look at 3 years, a lot of the homes in the cities are seeing their price being depreciated, around 20 to 30%. So prices of second-hand homes fell 1.2% in first-tier city, 1% in second-tier city, and 0.9% in third-tier cities. For the first months of 2024, property investment fell 10.1% year-on-year versus 9.9. I think I should put it for the first 5 months here. So the first 5 months is down 10.1%. First 4 months down 9.8%. The survey of urban unemployment rate in China stood at 5% in May, falling from a high of 5.3% recorded in February this year. Now, one of the key things is that I just read a report this afternoon that the government will introduce a new stimulus in the sense that if the family has more than 2 children, the buying a second home for the will be considered buying a first home, okay, because they see as a second child, okay, they will actually be their first home. So that's why they are loosening the rules a bit. So last time they say that if you already bought a house, you cannot enjoy the kind of benefit for a second home. So right now they treat, if you have 2 children, then you can buy a second home and it will be treated as a first home. So there are advantages to it because if you are a first home buyer, there are some reduction. Okay, for example, the down payment, the deposit is lowered by 5%, if I'm not wrong. And also there is a limit to the floor of the floor for the mortgage rate, okay, which means they cannot raise it beyond a certain bar. So that is why this policy just came in, and hopefully we can see some recovery. But I think after being burnt for greater part about 3 years, the Chinese public will still be very skeptical, except for those families who already can afford, to raise 2 or 3 children, then those people would likely take the advantage, okay, and register for another first home. So, but then the general public, I think a lot of them got burnt, so they will be less eager, but it will take time for the market to heal. And China's exports jumped 7.6% year-on-year in May to $302 billion, rising at the fastest pace since April 2023. Import rose by 1.8% to $219 billion, missing estimates of 4%. This results in trade surplus. Okay, in a trade surplus of 82 billion. Now, this is pertaining to goods only, okay, not services. So despite the trade tensions with the US and EU, China exports have powered ahead with increased trade with the global south. Also, China is steadily reaching self-sufficiency. The main reason why imports have fallen below expectations. The explosion of export could be good for Chinese shippers, especially with container shipping index now rebounding higher. So the container shipping index is about 5,000 plus dollars per 20-foot container, and it's quite steep, okay, versus just a year ago. So I've shared some of the I've shared one Chinese shipper for the period 9 course, so you can revisit it. Especially last week we saw some heavy selling in the Hong Kong index, and the share price have fallen back to $3 plus from close to about $4. So that would actually push the yield of the dividend much higher. So other economic news, China-Europe freight train services recorded highest monthly transport volume in May, and during the month, number of China-Europe freight train services increased 14% year-on-year to 1,724 trips, while cargo transport total 186,020 equivalent units of containers, up 13% year-on-year. The transport volume in May was the highest monthly record in history. China non-financial ODI, outbound direct investment, came in at $60 billion in the first 5 months of the year, up 16.3%. Cooperation with countries participating in the BRI continued to show growth momentum as ODI in these countries came in at $12.8 billion in the January to May period, rising 12.7% from the same period a year earlier. The turnover of contracted overseas project rose 8.8% year-on-year to $58.79 billion. The value of newly signed contracts hit 87 billion, marking a rapid increase of 21.7%. So here it goes to show that, China right now is investing overseas, outbound. Although FDI is important, but China is pushing its, expertise beyond its borders, and that it's participating in a lot of projects. And a lot of all these projects, of course, involve a lot of transactions, and it also helped to establish China as a major participant in the developing economy of the global south. And this actually helped give China more economic clout. So China National Program of promoting large-scale equipment renewals and replacing old consumer goods with new ones has started to show results. In the first 5 months of this year, investment in the purchase of equipment and appliances increased 17.5% year-on-year. Now, this is another effort to stimulate consumption. China installed capacity of power batteries went up first 5 months of the year. During the period, the installed capacity of batteries stood at 160.5 gigawatt hour, up 34.6% year-on-year. So China is also boosting its investment in infrastructure to achieve energy independence and meet its net carbon zero target much earlier. In May alone, batteries output gained 41.2% to 39.9 gigawatt hour, and the country's NEV sector sustained sound growth momentum in the January to May period. NEV output surged 3.93 million units in the first 5 months, up 30.7% year-on-year, while NEV sales rose 32.5% to 3.9 million units. Meanwhile, the penetration rate of NEVs in China expected to hit 49.1% in June. So you can see that the promoting equipment renewals also include, exchanging ICE for NEVs, okay, and also exchanging electronics products for higher end electronics products. So another market which has seen some gains in the Hong Kong Stock Exchange are actually the electrical appliance manufacturers and retailers. Okay, so some of it has seen the share price last year was hovering around $3. Right now has already gained about 100% compared to more than a year ago, simply because of this ongoing campaign to reduce old electronics with new electronics. So this campaign will continue, and you can actually check on some of the Chinese electronics retailers and manufacturers. So power generation in China, power generation of China's major electricity production enterprises went up 2.3% year-on-year in May. Total power output of these firms reached 717.9 billion kilowatt hour. So a breakdown of the data revealed that output solar power soared 29.1%, hydropower rose 38.6%, and the output of thermal power and nuclear power shrank slightly to 4.3% and 2.4% respectively. So China's electricity consumption climbed 7.2% year-on-year to 775.1 billion kilowatt hour in May. So if you see that China's power consumption is always above its GDP, Okay, GDP is around 5.3, but power consumption can be anywhere between 7 to 8%. Now, this have led to many economists to argue that China is underreporting its economy. Okay, and there are some people in China that said that, well, economy in China, we are actually basing it on manufacturing and not so much on services. Okay, so that is why they really stick to the term of GDP, means gross domestic products. Okay, the the actual value of the product, and services are sometimes discounted because there's no product being involved. So that is how was explained by some Chinese economists. And that is why, you can see that there's a disparity between the GDP, which is often much lower than the um, total power consumed. Okay, so specifically, power consumed by primary and secondary industries went up 10.3% and 6.8% year on year, respectively. Power used by tertiary industry sector went up 9.9%. So you can see that this is part of the rural revitalization, that the rural area right now is seeing rapid economic growth based on the power consumption. China residential power use in May registered a 5.5% increase year on year. Now, in the auto industry, from January to May, auto sales in China rose by 8.3% to 11.5 million units. In May alone, auto sales reached 2.42 million units, up 1.5% year on year. On a monthly basis, the May output went up 2.5%. In fact, one of China's major uh, major um, auto manufacturer. Okay, we have talked about uh, one in during the period 9 course, but another one, okay, had seen its revenue shot up 50 over percent simply because of the transition from ICE to EV. Okay, so a lot of the Chinese EVs are in the market. If you are looking to buy stocks in the Chinese EV market, you need to be very selective. Okay, only buy those that are generating profit, because a lot of them are still suffering from extreme cash burns. Okay, even though they have been listed for a few years, their cash burn has been around a few, I think about 2 to 3 billion renminbi a year. Okay, so that's why you need to be very selective. So from January to May period, NEV output surged 30.7%, okay, to 3.9 million, and NEV sales hit 3.9 million, increase of 32%. According to International Data Corporation (IDC) global market research firm, the scale of NEVs in China passenger car market is expected to surpass 23 million units by 2028, with a compound annual rate of growth of 22.8%. So the NEV market, is going to see more growth in the coming years. So China exported 2.31 million units of automobiles from January to May, jumping to 31.3% year on year. A total of 1.79 million units of traditional fuel cars were exported in the first 5 months, soaring 37.5% year on year. So NEV exports came in at 519,000, rising 13.7%. Now the NEV craze is very big in China, but elsewhere there are still a lot of demand for hybrid. Okay, and that is why some of Chinese vehicles, although they are very big manufacturers of EV, they also manufacture hybrids, and that is why, okay, China is able to beat Japan into becoming the world's largest car exporter in the world, or manufacturer in the world. So because they are manufacturing for external market that also include hybrids, not necessarily just and EVs. And in a recent poll in the US, many of the people who actually seen both have seen the hybrids as well as NEVs, they decided that they still want ICE because they like to feel the power of the surge when they step on the accelerator. Okay, they like the kind of experience with ICE. Probably because I think the US had banned so many Chinese vehicles from coming to the US, they have not really been exposed to the comfort of driving a Chinese NEV. Okay, so I think they have really not seen, okay, what it can do. So that's why, they still prefer ICE. So what could happen in July? Now, the Chinese government could implement some targeted stimulus during the third plenum meeting in July with the objective of driving science and technology R&D and the associated industries, helping the real estate to recover and opening up the financial market further to boost investment. So I think this will be the few objectives that they have. Now, China has ample room for stimulus as its inflation rate remains low. To date, the free visa for foreigners have helped to boost consumption in China, and this could encourage the government to offer more visa-free arrangement with other countries. More importantly, this move have allowed the country to showcase to the world the true China. And in fact, a lot of foreigners who visited China, they have so many followings on their YouTube video, saying that, wow, we didn't know China is this and that. Okay, so that goes to show the power, how MSN, the mainstream media have actually, brainwashed a lot of people into thinking that China is still a very backward country. So China's economic indicators will continue to show positive growth and inflation will remain muted. However, we cannot expect the real estate to recover speedily. More assessors need to be unwound first. And that's why the government is looking into ways for cities to buy up unfinished projects or to buy projects that are stranded, okay, complete it, okay, and then turn it into affordable housing. So in terms of geopolitics, Israel looked determined to start a war with Lebanon with US backing, and this could attract other fractions in the region to the war. A breakout in the war could affect global market, and commodities led by oil will likely to move up, along with gold and silver as a hedge against all types of risks. Recent coup attempts in Africa and Latin America highlights that battle for the minerals resources has intensified. We can expect more nationalist policy to be implemented as nations seek to protect their resources. A series of attacks into Russian territory using NATO weapons, and we can expect some serious retaliation from Russia, including the destruction of Ukraine's major infrastructure. Russia has recently launched an all-out attack on Ukraine's airfields capable of hosting the F-16s. Should NATO start the attack from NATO bases, then these bases could be targeted as well. And Russia has already put forward such a warning. Some de-escalation of tension in the South China Sea after recent incidents saw the US backing off from supporting the Philippines because the US has more urgent matters in the Middle East. And because of just a small skirmish, the US will not take on China. So lastly, let's look at the potential Japan currency crisis. Japan is already in a currency crisis as the yen continues to fall against the US dollar. Now, another bank that a number of economy analysts are voicing out their concern is the Japan's Post Bank. Okay, this could be another bank that could face problem. The BOJ is trapped as it cannot raise interest rates to the required level to deter its fall. To do so would bankrupt the government. So the Japanese have to endure high inflation and probably hyperinflation. The yen weakness is also affecting other regional currencies. The renminbi is down 0.28% versus the US dollar, while the Korean won is down 0.72% versus the US dollar in a single month. The stronger DXY or dollar index is exerting a pressure on precious metals. So, Evelyn, back to you for the summary.
Okay, let me just reshare my screen because I have just updated something. Okay,
Okay.
yeah. Okay, let's just go through this. Okay, can you see my screen? Give me a one in the chat. Anyone can see my screen? Okay, yeah. Okay, thanks, Kenneth, Jesse, Jeremy. Okay, so let's look at the month in terms of summary. As per the study by PC, we will see global tension and conflict will intensify, and then the property market will be impacted, I think, across the globe. And precious metal will show a slow movement or stagnant movement. Although you see the scene here in the month of July. However, it doesn't mean that the precious metal will be, the price will be good. I will predicted that it will be slow movement or stagnant with no support in price. And okay, so I just would like to say that tomorrow, 30th of June, is actually a Yin Virtue Day, and I will share in the Telegram what y'all can do in the Yin Virtue Day, because actually it's a good day for you to accumulate good merits. You can either do donation and all this, so the energy is suitable for that tomorrow. Okay. Uh, we have actually I think two Yin Virtue Day per month. So it so happens that tomorrow one, this month is on the 30th of June. So I just would like to share with everybody here. So I'm over to you, PC. You can do the summary here.
Yeah. So looking at it, we could be weeks away from a major war in the Middle East, yeah, because as I mentioned, when embassy staff are being evacuated, it shows the seriousness of the situation. And of course, US Navy assets are now closer to Lebanon and Israel. And the US CRE crisis is not ending soon, but the housing crisis is bubbling to the surface, as I explained earlier. And battle for precious metals has intensified, with the West keen to retain the US dollar hegemony. Okay, just change that to US dollar, while the East moving towards the unit backed by gold. Now, this will create a seesaw movement in price. So that is why, in June, looking at the earlier price movement, I was saying that we expect that the precious metal price would continue to get support to move higher at least. But you know, you have a lot of bullion banks coming in to sell. So what we could see is that there will be within a narrow range up and down, but towards end of the month, we will likely see little change. Because right now we have entered a stage whereby the US is doing everything it can, okay, to suppress the price of metals from going up. Because that means the loss of credibility to the US dollar. But the more that the bullion banks are used by the Fed to suppress the price of gold, the more net losses will be accrued by the bullion banks. So it's just like things will continue. They will try to push things as much as they can, because they really have no options where the US is concerned. So that would actually prolong the situation, and that paper loss that the bullion banks carry will continue to expand, and it will come a situation whereby they might throw in the towel eventually because their losses have become so huge. Okay, and gold is being absorbed by many major financial institutions because they are going into the end bridge where the currency needs to be backed by where the unit will be backed by gold. Now, in such a situation, those that have vast resources like Middle East. Okay, they have vast amount of oil, and therefore they can readily trade. Okay, without needing to be have to use the unit as a final settlement. For example, Saudi sell to China. Okay, they use the renminbi. Okay, so Saudi Arabia get paid in renminbi, and then Saudi Arabia use the renminbi to pay for China's expertise in developing its infrastructure. So there is no need to go back into a settlement that square off the trade. Maybe towards end of the year, and whoever who have the surpluses would then demand payment in the unit as a trade settlement, and therefore that is then settled. Okay, now those that do not have vast amount of resources, then they could be in a bit of a challenge because they import from, let's say, from China, but they have little to offer back to China. Okay, so that means that those countries where China comes in and develop the infrastructure, do all this and do all that, okay, they might have to settle that payment in the unit. But then if they don't have, if their currency, okay, is not strong enough, then they need to have gold, in their reserve, okay, to put strength to their currency, because probably the first trade will be using local currencies. So if, let's say, they have a lot of gold backing their currency, in that sense, then their currency would actually have a better value. Okay, so when the settlement in the unit comes, they still have the gold to pay to square off. Okay, but because their currency is backed by gold, therefore their currency would be in a stronger position. So we will see a lot of all these to and fro's getting into work. Okay, but probably it will involve as little countries at the beginning stage before it's gradually expand, because I don't think they will actually say that all BRICS will have to use this. Okay, it will start with a few, like right now it's between Russia and China already using the ruble and renminbi pair. Okay, eventually they will form the basis for the currency, and not all currencies will be able to be included in the unit, to back the unit, because they mentioned that 40% of the unit will be backed by gold and 60% by local currencies. And I believe not all currencies will be readily accepted into a reserve, and only those that are very strong, either with commodities and such. So if they want to be included, then they need to have a lot of gold to back their currency. Otherwise, okay, they will not be able to be in the reserve, and therefore, when it comes to trade settlement, they would require the kind of gold to settle. So that is why those countries, you see Turkey, which doesn't have a lot of resources, they keep on stacking gold. Okay, India is also another country that doesn't have vast resources. They have a vast population, but India industrialization actually is not strong. So that is why we will see demand for gold is there, but then another way, in another situation, the US will be putting a lot of pressure to suppress the price of gold. So as long as M2 money supply continues to rise, the stock market will find some support. Okay, yen will remain weak, which will boost the DXY, putting a cap for precious metal rise. So because there's a lot of so-called traders, even though there's this BRICS unit that will be backed by gold, they actually ignore all this news, and they often refer to the relative strength of the DXY or relative yield of the treasury, okay, to coordinate their trade. So if US dollar is stronger, then that means sell precious metals and sell other commodities. So that is how these traders function, okay, because it has been ingrained into their minds, okay, and also because it's automated by robot trading. So a lot of these parameters have not changed. So that's why whenever there's strength in the US Treasury yield, or or a strength in the DXY, you see commodities being sold. Okay, so that's all.
Yeah.
Q&A.
Any questions?